This is Ag Matters PM from the Iowa Agribusiness Radio Network, your daily recap of the information that affects Iowa's farmers, producers, and consumers right here in the heart of the heartland. With reports from our award-winning team of Dustin Hoffman, Riley Smith, and Mark Magnuson. Now, from the IARN studios in Des Moines, here's Dustin Hoffman.
Hello, everyone, and welcome to Ag Matters PM on the Iowa Agribusiness Radio Network. I'm Dustin Hoffman. Today's Monday, December the 1st, 2025. So glad you could join us. Coming up a little later on in the program, we'll talk with Sam Trainor of agmarket.net to find out what happened in those markets today. But first, we're going to wrap up our conversation with Iowa Ag Secretary Mike Naig about his overseas trip to Southeast Asia and what he saw when he visited the country of Indonesia. Okay, so then moving over to Indonesia, like you said, it was kind of a juxtaposition there with the, not having as much work experience with them. What kind of things did you come away with from that part of the trip?
So again, the dynamics are really similar in that you've got what is the fourth largest country by population in the world, Indonesia, 280, 90 million people, and it's certainly the largest in Southeast Asia. Their economy, they're a little bumpy right now, but they're still growing, and their middle class actually contracted just a little bit, but yet the larger trajectory is that it is growing and it's going to be sizable. And as we talk about every time that occurs, I'm not aware of any situation where when the middle class, when incomes were increasing and when the middle class expands in a country, that they don't immediately turn and say, we want more diversity on the plate. We want more protein. In a society where you might eat a lot of rice and you might be able to get some vegetables, when your ability to put protein on the plate in a consistent way is really important. And so that's the opportunity that exists there. Indonesia, though, has got some barriers set up. In fact, U.S. beef was out of the Indonesian market for several months this past year and was able to get that reopened again, but it did create a hiccup. And there's some things that are happening there that we would like to have a little more consistency. We would like to see more science-based approach to regulation. And so there's some work to do in that market. Now, having said all that, right, there's work to do. There's some things, I would say that the thing in Indonesia is it's more of non-tariff barriers that need to be addressed, maybe as much as they need to be tariff reduction. So that's a different little dynamic there for Indonesia. But all that being said, it's a strong U.S. soybean market. And there's DDGs that are going into Indonesia as well. Beef would be a huge opportunity in a predominantly Muslim country like they are. But again, we've got some regulatory, some barriers that exist. But doggone it, you and I both know that where U.S. beef gets a chance to compete, consumers will pick it every time.
So maybe just a quick overall then, review of kind of synopsis here of how things went and what you walked away from on this trip that you guys were able to talk about and what the farmers or maybe that were on this trip got to experience as well.
Well, again, I think for the farmers in the group and for all of us, it was again probably that juxtaposition of the two, right? You've got this Vietnam and Indonesia, really kind of a challenging place to do business, even for the importers. I mean, even for the folks that we're talking about domestically, saying we want to do more business with U.S. companies. Because of tariffs, because of non-tariff barriers, that makes it challenging. So I think what we gathered was Vietnam's really on the upswing, a really good trajectory there, especially with a new trade agreement on the docket. Indonesia, with also a trade framework that was signed with the Trump administration in Indonesia in July, and those negotiations are ongoing as well. Both will benefit tremendously from those newly negotiated trade agreements. One, because we think there's a whole lot more opportunity to get us more price competitive in Vietnam. And in Indonesia, it's probably got as much to do with the non-tariff barriers. So work to be done for sure. But I think we all come back with a confirming that this region globally is absolutely where we need to be playing offense, both from a feed ingredient and grain standpoint, but also from a protein standpoint and ethanol. Those are all strong, either strong markets already, could be increased, and we just think across the board there's opportunity that exists.
All right. Well, Secretary, welcome back to Iowa. We thank you so much for giving us the update on that trade trip, and you have a happy Thanksgiving, and we'll talk to you again for our monthly chat in December.
Well, I appreciate that. Nothing like traveling and then coming home to give you a perspective and make me feel even more thankful and blessed that we get to call Iowa home. It certainly is good to be back, but we'll hope we did some good on the trip.
And that again was Iowa Agriculture Secretary Mike Naig. It's time now to look at the closing markets, and we're being joined by Sam Trainor of agmarket.net. Sam, taking a look at the grains, and it looks like soybeans took it a little bit on the chin here today. What happened?
They did. Corn as well. Just a down day in the grain markets and livestock. I'm sure we'll get to that here a little later on as well. But had a lot of optimism coming into today after what we saw to end the week last week. Obviously, it was a shortened trading week, but Wednesday going into Thanksgiving had a nice rally, and then Friday as well. But overnight tonight in the corn market, I think is what kind of led the trade today. Obviously, you see the bigger move in soybeans, but I think you look at the charts in corn. That March corn contract went right up against the 200-day moving average and failed to move through that once again. So that ignited some selling there, and then I think that rolled over into the soybean market. I think you're going to need to see both of those contracts kind of move in unison to get through some of those moving averages and continue this upward trend. As for soybeans specifically, I think we were really looking for some more flash sales announcements this morning to China to get closer to that 12 million metric ton target by the end of January. Right now, we're only about 18% of the way there. 2.25 million metric tons is what we have sold to China so far. But as I mentioned, there are no flash sales this morning, so did not have the news there to support any further buying here this Monday morning.
We did hear overnight too that there was China refusing a shipment from Brazil because of some possible contamination. Did we hear any more about that, and why would the market not have picked up on that?
Did not hear any more on that. That was just kind of like you said, that kind of came out in the overnights. You would think though that would certainly be supportive for the U.S. soybean market. We have heard of China canceling some South American shipments there, which is a good sign for our domestic export program here. And I have heard some people talking and some rumors out there that this 12 million metric ton target very well could be backlogged here. We have until the end of January, and a lot are thinking that maybe as they draw near the end of the South American shipments, they start ramping up their purchases pretty heavily here in the U.S. So I'm still looking for a pretty good upside here in this market over the next couple of months, because I do think that as we get closer to Christmas and into the new year, you'll start to see quite a bit more soybean business come on board, and hopefully a lot more from China.
All right, moving to the livestock side of things. Sam, you did mention it was a rough day across the board. What did we see out of those cattle and hogs?
Yeah, started off higher, so initially had some optimism, but that gave way pretty quickly and ended up about $2 to $3 lower there on the cattle. So looking for that market to kind of stabilize here. It's been so volatile. Last week we had an incredible run to end the week. It was kind of forgot about on Friday there with the shortened trading day and smacked right in between a weekend and a holiday. Not a lot of people paying attention to the markets there on Friday, but we did have a sharply higher day Friday. Thought maybe we would see that continue here today, but in order to feed a bull market, you need to continue to give it news, and there just wasn't the news out there to push that any further today. Didn't really see any negative headlines either to that front, but did pull back a little bit. And unfortunately for the cattle producers, I think we're just in a situation with these markets right now where it's just going to be very volatile, and you just got to make sure that your price is protected there, whether it be with options or with some LRP insurance or whatever the case may be. These markets are just awfully volatile, and need to make sure you're protected with that price risk.
And then what about with the hogs, Sam? What turned up there?
Hogs had a down day as well. We were a little bit lower here, but looking for potentially a turnaround here tomorrow and into the end of this week. The hogs have been been down here for quite a while, but looking to turn around seasonally as we get past Thanksgiving and into the Christmas holiday. You know, you talk about your Christmas hams and that sort of thing. Look for some demand to pick up here as we enter the holiday season, and look for that trend to kind of pick back up a little bit. But it was a little bit of a down day today.
All right, Sam, if folks want to look at some of the intelligence you guys are following and some of the outlooks you guys have for the markets, what's the best way for them to get started on that?
Best way would be to visit our website at agmarket.net, or you could give us a phone call, 1-800-779-1515.
All right, Sam Trainor of agmarket.net's been with us here today. Sam, thanks for the insight. We'll talk to you again real soon.
No problem. Thank you, Dustin.
That again was Sam Trainor of agmarket.net. Let's go ahead and take a look at the closing numbers on the Iowa Agribusiness Radio Network market screen. At the close, December corn was down 2 3/4 at 432 3/4. January beans down 9 3/4 at 11.28 even. Soybean meal down $3.30 at 3.1110. Soy oil up 30 cents at 52.06. Chicago wheat down 3/4 at 5.30 1/4. Kansas winter wheat down 3/4 at 5.17 even. Kansas spring wheat down 3 1/4 at 5.31 1/2. Minneapolis spring wheat up 3/4 cent at 5.80 even. Oats down 5 3/4 at 2.89. On the Merc, live cattle down $1.37 at 214.20. Feeders down $2.90 at 321.07. Lean hogs down 37 cents at 80.22. Pork cutouts unchanged at 93.22. And Class 3 milk down 11 cents at 15.76. That brings us to the end of the closing markets and brings us to the end of today's show. You can find all our content online at iowaagnet.com, as well as follow us on Facebook, X, and our YouTube channel. Also, don't forget about our podcast, whether it's the free daily market podcast, Weekend Ag Matters, or the daily Iowa Ag Matters program. You can find all of them under the podcast tab at iowaagnet.com. From the IARN studios in Des Moines, I'm Dustin Huffman. For Mark Magnuson and Riley Smith, we thank you for watching. This has been Ag Matters PM.